Dave, I think the attention will mostly be on streaming customer growth, particularly in light of the slowdown at Netflix. What are you looking for?
Well, certainly the streaming business is going to be probably the top focus in the earnings report today. And the consensus number is roughly for adding about 5 million Disney Plus subscribers. Certainly Netflix and seeing a subscriber loss in the first quarter has not boded well for the entire industry. But we do think that Disney is still earlier in the growth curve in streaming, and think that they still have more room to go in terms of adding subscribers. And certainly look at others in the streaming industry, still we're adding subscribers in the quarter. So we think Disney also will be in that boat.
There are so many pluses out there. There's Disney Plus and Hulu Plus and ESPN Plus and HBO Plus, and they all add up to a minus in my bank account because I'm paying for them. Let's talk about the parks. What do you expect there?
Well, certainly we expect to see further recovery in the parks on a year-over-year basis, although, relative to the previous quarter, typically first quarter is seasonally down versus the December quarter. But we do expect solid profitability. The company has already said that in the December quarter, the domestic parks were actually more profitable than they were prior to the pandemic. And we expect as capacities go back up worldwide in the parks that they may actually be more profitable as a whole through this year than they were previous to the pandemic. So certainly we see that as one of the bright spots in the Disney story, and the market seems to be ignoring that potential for further earnings improvement on the park side of the business.
All the buzz, Dave, seems to be about the new Top Gun movie, and it's just a reminder how difficult these businesses can be. Disney's library should be stickier, parents showing their kids the same movie over and over again, for instance. So is there anything in the metrics that they could use that would illustrate why investors should stick with their streaming model over some of the alternatives that are out there?
Well, certainly they do have a very strong library of content to draw from. And as you said, the content is more geared towards families and children. But at the same time, the company is investing a lot in their content this year. And the content offerings in particular, as we move into the second half of the year, look pretty strong. And so that should be a factor as well that should help in continuing to attract subscribers. Also, the Disney Plus price point by itself is lower than some of its other competitors in the market, certainly lower than Netflix. So as inflation moves forward, that may be something that gives Disney a little bit of a pricing advantage compared at least to some of its competitors.
So I want to get a quick answer, if I could, on the involvement of Disney in the debate over the, quote, "Don't Say Gay" bill in Florida and the apparent removal of its sort of special sort of operational status. What do you make of that? Is it material to Disney? It's not going to be material this quarter, but going into the future, will it be?
Well, certainly there's a lot of uncertainty around what that move will cause for Disney, and really the laws that was passed does not go into effect until middle of next year. So there's still some time before Disney would see much impact on its financial results. Even at that, it looks like the biggest hindrance from that change might be additional red tape in terms of gaining approvals for new construction in their parks in Florida. From an actual cost point of view, it's basically shifting the responsibility for government services from an entity that Disney funds over to potentially the two counties that surround the Disney parks. And at least on the surface, looks like the financial burden might actually be shifted more to them than actually on Disney. Now, certainly Disney would still have to support them financially for those services. But the net certainly is that it doesn't look terribly negative from a financial point of view, especially in the near term.